Okay, I think this is working now. So yeah, thanks everyone for joining us. Apologies for the tech issues causing that delay. But we have here Oliver Rye, who's a great long-standing client of ours. He runs his own syndicate, and to provide a bit of context, syndicates are an increasing growing client base of ours at Mara. What is Mara? We're essentially an investment administrator setting up SPVs to help private wealth individuals and other investors from the private wealth sector, some institutions as well, invest in private assets. So we wanted to put together this syndicate series because the term syndicate is one a bit misunderstood, but secondly, we think there's a really interesting opportunity for groups to come together to form these syndicates. And it's actually easier than you think, which we'll talk a bit little about in this series. So delighted to have Oliver here with us with this series. We're going to do the first episode today, which is really, about what is a syndicate. So just breaking that down, talking a little bit about, my background, Oliver's background, running his own syndicate too. So without further ado, let's pass it over to Oliver and he'll just introduce himself, talk a bit about, Hersir Ventures, and then we'll get started from there. Thank you.
Cool. Thank you, Sasha, and thank you for inviting me today. And happy to be here and happy to share some of my experiences and learnings playing the role as a syndicate lead. But to give you a brief introduction about myself, I am Oliver. I'm based out of Denmark, North Copenhagen. I have been investing for the last 8 years and for the last 3 years full time. Prior to that, I've been part of a few startups and scale ups. Also been entrepreneur myself, though with limited success, and also been working in large corporates. Been an expat in China and Singapore and Greece, and I've been a bit around the world doing project management and sales and marketing. But yeah, back to the idea of me not being a successful entrepreneur, what has actually worked best for me is investing. So I'm, of course, doubling down on that. As I mentioned, I've been investing full time for the last 3 years. First part of one syndicate where we were 10 entrepreneurs together, investing out of the group, out of a pool of money. After doing that for a few years, I wanted to do something for myself that I thought was maybe a better idea, and that was creating my own investment firm called Hersir Ventures, what I'm doing today. And what I'm basically doing is deal by deal syndicates. So investing in the best syndicates that come through my network of GPs and founders across Europe, where I work closely with the founder, get an allocation in the round, do my investment analysis and material and get conviction. And then I offer my network to co-invest with me in an SPV provided by Mara. I have done in total, including the other syndicate, 35 investments in total. And I've done 4 investments so far with Mara, with 3 more currently running right now.
Okay, great, thank you. So, what is a syndicate exactly? Like, how do you, define like the crux of it?
Yeah, so there are different ways of looking at it. Reality, a syndicate is actually just a group of investors gone together. But what you say, like in my case, is probably what you rather call like an angel syndicate. So it's a group of people pooling in the capital. And that can be where you pool the capital and then invest, or you find an investment and then you pool the investors into that one particular one. But there's many different ways of running it. It can be like an investment club where people pay a subscription to get the deal flow. It can be, as I mentioned, the first one I was part of, where 10 people or amount of people commit an amount into a pool and then invest out from that together. Or you can do it as I do it, where I identify an investment opportunity, curate only the best ones, and then create opportunities for my network to do it on a deal by deal basis, right? So they can cherry pick the ones that they like and have interest in.
Yeah, got it. Yeah, someone asked me this recently, what is a syndicate? And my sort of response was it's not really a regulatory definition. I think in a documentation sense, it's more of a legal construct, but essentially it's a, group of investors coming together to invest in something. As you say, it's a club. We've got many syndicate clients, I think close to 20 now, many of different backgrounds. They usually have a common theme, defining themselves. And, it could be part of a media organization. One is affiliated with certain venture funds and other, has a B2B sales background. How would you define your syndicate? Like what is the sort of the common, theme there?
I think the common theme is that it's all part of my personal network, right? That's where it's coming from. And what I've found is a good way to build out the network is, of course, when you make deals or make investments, you work with the founder and actually gets the founder's network in. And if they see I have access to a founder that they like, they might like other stuff I come with. So it's constantly trying to be valuable to the people and build network effects by working with founders and also broadening out to new people with new investment opportunities. And normally I also do it through if I'm doing due diligence on something, like right now I'm working on space tech case. I would actually go around to people I know within the space tech industry to get some feedback. And sometimes that even tends to convert them into an investor at some point, but not the intention originally.
Got it. And then, yeah, we've got lots to dive into today, but I've never actually asked you this, but what's Hersir? Like, where does that name come from? It sounds kind of like Viking, Nordic-ish. It's a
It,
lady from Denmark.
wow, the amount of time you spend on a name and you end up coming up with something people can't pronounce. I think that's the thing that I do apparently. But Hersir is basically an Old Norse name, so it is true, it is North. People from Iceland think it's a very cool name, so at least that's cool. There are 350,000 people. Anyways, Hersir is an Old Norse name for a military leader of such, like a small group of leader for a leader for a small group of soldiers. So I figured that works pretty well.
Mhm.
And the whole idea is that it has like a Nordic outset, and I'm leading a group of people, a syndicate on adventures and raids and whatever across Europe, right? So there's a lot of symbolism in it, but I end up picking a name that for some reason is difficult for people to say, but I just see in English I would say Hersir or in Danish Hersir. So
Got it. And then what are the ambitions for, this syndicate? Because some of our clients, they see this as a path to, raising a fund. Others just see it as a way to, invest in cool startups with their friends. You're the lead of this. You created it. What's the sort of, short, medium, and long term, if you had to kind of break down the ambitions for Hersir, if I
yeah, I
pronounce that?
think I think the ultimate ambition, I think from for me and for many others, is that it can evolve into a fund, and it's a great way to start investing. I ultimately did it because I was kind of running out of money to invest in startup as an angel. So this was one way for me to become cash flow positive or just cash flow neutral investing into startups. So being able to continue investing, building up a track record, and also building up LPs and networks and so on. So actually creating a foundation and vehicle to build on top of that. And actually, the funny thing is, I've for years been suggesting people that wanted to start a fund that they should just do SPVs, even though I didn't do it myself. But now, when I started doing, I can see there's a lot of things that are difficult, and I think one thing that I did wisely, and this is not just to blow your horn, I actually think it's super important that you find the right partners to do it with. And just to give you, of course I've told you this before, Sasha, but what I basically did is I went out and looked at every single SPV provider in Europe and in US to try and identify what would make most sense for me as a syndicate lead based out of the Nordics and my LP group, mostly Nordics to begin with, but also broader sense. And my conclusion was that the UK Bear Trust was probably the most cost efficient and the best regulatory tested and tax transparent and so on. So for me, it was ended up where I started, like looking at these more traditional providers, and then through Andreas from EUVC, Sasha had a great recommendation, and I ended up calling you, I think maybe 8, 10 times to
Maybe
wrap
like
my
15, actually. I
mind
remember.
around
I was on
what
holiday at
is
the
a
time.
UK bear. I'm so sorry. I told you I was the worst best customer, but it is so weird because in Denmark we have our legal structure, a legal system with entities where you're limited to being 7 actors in a company. If you're more than that, you'll be considered a fund, and then you fall under all fund regulation, right? Which is completely nonsense. So I had to find a vehicle or a entity to invest through that didn't require annual reporting and annual auditing, and also where I can have more flexibility in members joining the syndicate.
Yeah, that's an interesting point as well, because I've talked to some groups and they say setting up SPVs is almost like setting up a fund. And I think that puts a lot of people off, organizing syndicates because, they've got to find an investment, they've got to, rally investors together, then they've got to set up this structure, which, seems complex on the surface. But I think I agree. This is also why we use the UK Bare Trust nominee. It's very flexible, easy to set up. You don't need to file it with any, regulators or, trust registration service in the UK. But yeah, I think that's it, and that's also why sometimes syndicates are better than launching a fund because when you do this and organize it deal by deal basis, it avoids the collective investment scheme rules and the eighth classifications, which has also stopped a lot of groups coming to market because they think they've got to pay for these expensive service providers and regulatory overheads. So I think I would add that's one of the advantages of a syndicate is that you can get to market quite quickly. And then expand a bit more on your role, right? Because I guess you don't need to worry about that structuring and admin as much with us. And then, what is
No,
your
no,
role?
no.
Your role
I
sort of,
actually just met
yeah.
with actually a few GPs today, and they all say it's just a nightmare doing SPV, and I'm just sitting there, and they think I'm walking through fire every time I do it. And I was like, I figured out my processes. I work with you guys, and it works. So I'm having a little fun with that. But I think anything that's a little bit challenging, it's about setting up the right processes, understanding what is needed and what's not, and then do it a few times, and then ultimately you'll figure it out. I can share that one of the things that I have appreciated the most is actually this. I know you might not continue doing it, but having this kind of white glove solution that you don't have to ask somebody to self log in and do all this stuff themselves, but you can actually do it via like a manual onboarding, right? Which personally I think is quite important. And every time I thought about these different processes, I always thought about myself as an investor. I'm always a little bit cautious with sketchy sites that you have to log on and share
Mhm.
private information, whatever. I would rather have a person. And obviously, either if it's like a 5 million euro fund commitment or a $10,000 investment, sometimes you have to go through the same hoops and information you need to fill out, and you always have questions in the way. So being able to do the white glove has actually made a quite a big difference. At least feeling very confident when I send my investors tomorrow and say, hey, you need to onboard with them. That will be fine. So yeah.
Yeah, I appreciate you saying that. I think our philosophy with Mara has always been, not just like a shiny tech platform, right? I think with anything to do with money, investing, that people persona element is just really important because, trust is crucial in every industry, but, even more so in finance and legal services. So that's always something, we've sought to provide, almost working with clients as their outsourced investor relations team, I think is, super important. And, your deals have been quite complex as well, right? So you need someone to be flexible and to, get stuck in and really, provide that support rather than just an automated onboarding solution. And I
And I
think that's
also think
necessary for
you can end up
syndicates.
doing a little bit too difficult for yourself, right? I'm also trying to like put the same terms to all the investors and stuff like that. There's no sweetheart deals. But again, you offer that, which none of the rest kind of do, to my knowledge at least, that every single investor you can do unique fee, unique carry, and all those things. Which is kind of cool if you want to do that. But that makes more sense when you have like a large investor and a lot of small ones. There might be some different terms and whatever.
Okay, cool. Look, so we've talked about a bit what syndicates are, how you structure, organize yourselves. You've even hinted on having different terms, how you commercialize the syndicate group as well. But this is something we talked about recently, this concept of embedded finance. What did that do? There's certain groups like supermarkets in the UK, for example, and they realized they've got this good, distribution network, and they started to launch, financial services products such as, insurance or, credit cards to this group. And, I think we were talking how the role of syndicates can play a similar role in perhaps media organizations who've got these large distribution networks and a lot of deal flow. Think also for law firms, accounting, banking, financial services firms with, these big networks and deal flow as well. And, how syndicates could play a role in commercialize these networks. Should we touch a little bit about that and some opinions, but maybe what you're seeing in the Nordics?
Yeah, I think what is interesting in the Nordics that syndicates are not that common. it's somewhat common in our different business angel groups where they will call it a syndicate, but really everybody's directly on the cap table. It's just a lead investor representing the other ones. And there's another group that actually creates a syndicate, but with a local structure, with the limitations of actors and annual reporting of like 1,000 to 1,500 euros a year and so on. So that you have seen, but everybody hates it. It's tedious and it's absolutely not scalable. There's actually one VC-ish firm that has done like 45 investments where they do like 1 to 2 to 3 million euros per investment. They hired a full-time manager just doing managing auditors for their investments, right? So it becomes an administrative nightmare, and that's again what we talked about. It is super convenient that there's very low admin and very low touch needed to touch the investments. Thinking about networks and so on, I think we have a few people in the Nordics that see a lot of stuff, and they see a lot of deal flow, and they actually don't have a really good way to monetize it besides helping founders, maybe getting warrants and options, or even doing like an investment club where they're like sharing the deal flow. I don't believe in that, because I just think it's still about quantity and not quality. And I think there's no need for more quantity. There's only need for more quality and high output. So actually, syndicates can play a role in that forget of creating SPVs. Is actually having people being able to monetize their awesome network and deal flow. And I shared with you that the first deals I made has been all me, all by myself. And yeah, you can do it. You have all the financial upside yourself, but it's also a lot of work. And now here after summer, I've actually started co-syndicating with people. So basically co-syndicating is where you are joining with a person, you're splitting the commercials, and you both have the responsibility to win the deal, get the founder aboard, get the allocation, and then cross-pollinate your networks, right? Have the other one you co-syndicate with as his network. If they want to co-invest, now ask mine. And then hopefully we will get somebody to fill up the syndicate. And then we just split it 50-50 down the way. There are different ways of doing it, but this has been the most organic way so far. And now I'm doing two with two different persons, and it's already a lot of fun because then you're not completely alone.
Okay. What are their backgrounds like? And what communities are they part of?
Yeah. So one of them is like an ex super, comes from one of the super scalers, been living in San Francisco for 8 years, coming back home, wanting to do a difference in the ecosystem. He's literally drowning in amazing deal flow, right? But he had no way of monetizing it. And he has seen what I've been doing with my SPVs, and we've been meeting for several times, and we finally agreed that we should do it together, at least to help him. I told him, we can do a deal together. I can show you how you do it. If you want to do it yourself, be more than welcome, right? Then you are now trained to do it yourself, even though it's not that difficult. But ideally, I would rather see we have a partnership. If everybody wants to do a syndicate deal, come to me and we can do it together. And I think one of the cool things is actually complementing each other. So he has a lot of skills within deep tech that I don't have. But now I can actually offer awesome deep tech deals to my network, which I would never be able to do by myself, and actually feel very confident that it's a good investment. I can do it together with him. The other one I'm doing with is a Norwegian guy. We're actually getting access to his Norwegian network for a few hundred people, which I have no clue of getting to, and I'm not legally allowed to reach out or market or anything. But by cross-pollinating networks, that can, and if we get a handful of them to invest in a deal together with me, I can offer new ones in the future, and then so on and so on.
Okay, interesting. Yeah. So, but on this network communities thing, I was thinking also like universities, they often have, what's called spin out companies, but, it'd be really cool if universities organize syndicates more for graduates and students to, invest in some of these startups. Obviously, there's some, compliance regulatory points to consider just around, promotions of, private securities and, qualifying people appropriately. But I think that's one angle there. Also influencers who've got large distribution networks. Of course, most of these are pure retail investors, but it's about thinking about these groups and
But I think
networks, with
it's a
large
good point,
networks.
Sasha. But I think if you're going down that route, it's super important that it actually comes from the founder itself.
Mm,
I did one deal with a influencer where I told him I'm not allowed to market, right? I can offer my network, and that's more or less what I can do. But you can do whatever. It's your business, what company. You
mm,
don't say how you do it. You just say, hey, I'm looking for investors, right?
mm,
And then all the small tickets just goes down to the SPV. The same with the university. I even was considering reaching out to the business school because they're like different investment clubs, and it's actually also recommend people that wants to invest in startups. You might as well do it through a syndicate to begin with. Like it's the best way to start investing because you can do small tickets. You can spar and talk to the syndicate lead and other investors within the syndicate of what you think is good and great, share
mm.
deal flow, and you might get an idea what good looks like instead of you outgoing looking for the best deal that you come across and you have no idea if it's awesome or not, right? You have to look at least 500,000 deals before you have an idea what great or bad looks like.
Sure thing. Yeah. Okay. So yeah, that was a point about just the communities who could benefit from syndicates, universities, law firms, banking, audit firms, etc. Let's talk a little bit about the difference between syndicates and venture funds. Well, what are the similarities and differences in, everything from your point of view?
Yeah, so yeah, so it's a syndicate, so a venture fund. Let's take that one, right? So that's a investment vehicle where people commit capital in a black pool with typically no prior investments, with conviction that the manager has the network and deal flow that can
Mm,
source and win deals and lead or co-invest into deals and build a portfolio based on strategy set by the GP, right? There's a threshold there. You need to in Europe, you need to invest at least 100k euros to join these, and then it's full discretion, 20% management fee over the 10 to 12 years it will take, and 20% carry of everything above the hurdle rate. So that's a typical fund. You don't know. You have to trust the GP. You have to trust the strategy and actually do what he says he's going to do. A lot apparently does do it. Alternatively, if you want to build your own portfolio, you can actually do it by investing through syndicates or directly and build it up yourself.
mm,
So I want to normally say to people that want to start investing into funds, it's like, okay, you can go with the VC, and that's actually a great way to start if you have the funds, the 100k. But maybe 100k is what you have to invest in startups, and then you can't do it at all. So you have to put all into manager. But if you want to do something similar, you say, I would say to them, how much money do you want to invest? And then you break it up into the amount of startups you want to invest into, right? The traditional one around 20 to 25, that will give you really good diversification. That will be like a big angel portfolio. Can't do like 10 to 15, but at least create some smaller tickets based out of that. That is not always possible to put into the startups, right? And that's where syndicates are kind of cool, where you can say like, okay, I want to invest maybe 10, 15,000 euros every time. And I can always do that through a syndicate because they will accept my smaller ticket, whatever. So syndicates is a great way to, as I mentioned before, what does great look like? Get access to the deals, have people manage your investment for you, even though the syndicate lead in theory doesn't manage, but they actually lead the investment on behalf of the others. So you can choose to be completely passive if you want to. Everything is signed actually by you. I don't sign anything. I don't touch any money at all.
mm.
You manage all of that. Um, but that also creates like this investor protection and trust and so on. So yeah, so for me the difference is you can build your own portfolio by selecting your own startups, but you decide which one it is and you know which one you pick, obviously. Or you can do the black pool where you don't have no idea what you're going to invest in and you have to trust the manager.
Got it. But I'm also interested in the differences with decision making. Like, a fund has discretionary capital, so that they've already got money raised to deploy. So in theory, they can execute quicker,
Yeah.
just by, virtue of the investment committee, with the fund, approving it. But, how does that dynamic change for you? Because you've got a fundraise for each deal, and then, there's timings with that company. You're part of a wider round. So talk a little bit about, does that make things harder for you? Or maybe, makes you're putting maybe more skin in the game, and there's more like time and your own costs, which has to go into each decision.
Yeah, I think the best way of looking at it is a VC. Yeah, they have the money in advance, but most VCs, professional VCs, also have an investment process that is longer, right? Because they have responsibility of all other people's capital, so they need to be diligent in what they're doing. They maybe need to have 3, 4 meetings in total, two, three at least with founder teams in person. They need to negotiate the term sheet because they're leading the investment round. I'm not doing such, and they have to create investment documents and all of these things to be a diligent investor, right? So yes, they have the money in advance, but they have a longer investment process. Me, on the other hand, I don't have the money in advance, but I have the ability to make a decision on my own fairly quickly.
Mm,
If I like it and I'm excited and I have a feeling that my LPs would also like it, I can commit fairly early to a deal, even in the first meeting, saying, "This is interesting. I would love to work with you. I love to work closely with you. I would like a certain size of allocation that I'm sure I can raise. And if I come quick back to you with that money, I would appreciate to get even a bigger one." Many
mm,
times they might not be a lead investor or they're looking for more investors. Some of my value add is working very closely with them. But that actually kind of becomes my investment process, working with the founder. How are they to work with? Are they trustable? Do they keep their end of agreements and so on? And that's like part of my diligence process. But basically, I can get conviction quickly. I can lean in very quickly, and then I need to raise the money.
mm,
And that the particular part of raising money or getting co-investors, that is the hard part, in my opinion. As I when If you have been in the ecosystem, you have the deal flow and you have value add, you can win the deals. The only problem is having investors join into the round. And that is the one where you need to manage the founder, the co-investors, your existing LPs, investors, and the timing of all of that. And in all honesty, a few deals has I've had to let go because I couldn't get the investors in time, or somebody just comes out of the blue and takes the round ahead of me because I'm just
mm.
getting my stuff together to go to my LPs, right? So by far, there's an advantage of having the money in advance, but there's also a lot of value of being able to commit quickly. And I think that's probably the most important attribute you need as an investor in a very competitive environment we're seeing today, especially in the seed. I don't give them start with Series A, but at least with the seed and pre-seed, quick conviction can give you access to some really impressive deals.
Mm. But I'm just thinking because it's maybe harder for you to close on these deals just by virtue of those complexities you mentioned. Does that give like a selection bias to good opportunities? Because you have to concentrate your time on your best stock, whereas a fund has got this discretionary capital. In theory, they've got to deploy within a window. So is that an argument for your deal flow, being a little bit better than maybe say like a fund's, or how do you see
Yeah,
that?
I think my deal flow can be better in fund because I have no investment mandate. I can literally uh, invest in anything
Mm,
anywhere in the world if I want to, right? I just need somebody else to think it's a good idea. So so I think, and also my ticket sizes tend to be smaller, meaning that if I can identify the same opportunities, I'm generally not competing with a lot of people, right?
mm,
In the seed round, there's maybe room for a lead, maybe two leads, and then a smaller co-investor, right? So I think in theory it can give access, but of course, if you're a household name of the tier one funds, they have attraction power like no other. I'm not gonna beat their deal flow, but I can be competitive with other funds. And I invest with other funds only,
mm.
right? And they're also part of my network, and they try to share some investment opportunities where they're looking for a co-investor, right? And many times it's foreign funds investing into something in the Nordics, wanting a local investor, right? And then I can be considered what you're saying a super angel because I can put larger tickets in.
Got it. Okay. So you touched upon a few points there of why investors may prefer to invest in a syndicate deal versus like a fund. But from my perspective, I think a lot of it is just down to liquidity. Some people with a venture fund, they'll be locked in for 10 to 15 years, but with a syndicate, they can actually select the deal on a deal by deal basis, and then actually tie their capital in for shorter periods. I think that's one key advantage from my perspective. But yeah, tell me a bit what else you think. How would you sell a
Yeah,
syndicate to an
so in
investor?
all honesty, the reason why it's locked in a fund is because you have to take from the very first to the very last to be
Mm,
completely unwinded, right? Whereas a deal by deal, you look at it individual silo. At the end of the day, the investments in a syndicate, like the lifetime for let's say the startup to become a unicorn, will be the same. But in my opinion, if you invest early stage, you should also kind of exit on the way.
mm,
I talked to an investor in one of these. I'm not going to mention any names, but one of the fastest growing companies in the world, and they mentioned that they're probably not wanted on the cap table anymore because they're not able to provide any value. So at some point, you need to kind of divest earlier than a fund when you are investing early stage. Otherwise, the other aspect you can look at it, and one of the pretty big advantages in investing in syndicate, especially through the UK Bear Trust SPV, is that you can exit to other investors inside the vehicle or actually outside the vehicle if you want to, without having to trigger a secondary round of first refusal inside the main company. I say that as a main advantage to angels coming in. Say if you want to do an investment and you want to exit early, you can offer your selling your shares to anybody else within the syndicate or actually outside, and they come into the syndicate as well. Doing that with a founder in the early stage is just a huge headache, right? Having
mm.
to ask all the investors who wants to buy it, having to involve legal team to do signatures X, Y, Z, whatever. It's time and it's money, and people are going to hate you for it as an early investor. And that's also one of the values I tell a founder. I say, put all your angels down to that. If there's any angel for some reason who wants to jump ship at some point, you're not even going to hear about it. It's just going to happen behind closed doors. Everything moves on.
Mm. But I guess being part of a fund gives diversification, maybe, whereas a syndicate doesn't. It involves a little
Yeah.
more proactivity from each member to, make that decision each time a deal's presented to them.
Yeah, exactly. And I completely agree. I also think if I only invested on my own accord and everything that I thought was really exciting, I would
Mm,
probably hit like a cone of the market. Like, this is what other things cool. The advantage of being part of the old syndicate I was in was 10 people with 10 different interests. And you will see a
mm,
lot of different deals that you thought were terrible deals, but they were maybe good founders, but they had conviction because they had some insight in the market that I didn't have.
yeah.
And for me to be able to offer the same to my investors LPs, I think my co-investments now, like working closely with a deep tech guy, will give me access to deep tech. If I find somebody that's super strong in medtech or health tech that can come with some even better deals, or let's say bioscience, I don't know, I can really start diversifying my own portfolio as well.
Yeah,
So
sure.
so I think the co-syndication is definitely the best way of building diversity. Me as a syndicate lead and also as investors, that you don't only trust one, but you go to others.
Mm.
And yeah, so you basically also generally get like a higher quality.
Yeah, I'd agree. And I guess, the difference between, I always often draw comparisons from, public markets. Why do people invest in, mutual funds, index funds versus stock picking? Well, if everyone was sensible, they would just allocate to Berkshire Hathaway with their long-term returns. But, people like stock picking because it's fun.
Yeah,
You get behind a story, you actually put your own experience and interest into practice. But I guess the syndicate allows you to do that. But you're not just finding the deals yourself. Like the syndicates are doing the hard work for everyone. They're finding these great deals, they're vetted, and often you're putting your own money there, so skin in the game. It's not just the deal which you're selling to, make a brokerage fee. So I think syndicates provide that good middle ground from between passive investing, into a VC fund and, having to go out and find deals themselves, where they can pick and choose, what's offered to them via the syndicate.
yeah, and when if I'm looking at what I would do or what I've done, like for me, if I want to invest in the asset class, I would probably invest in a fund of funds, right?
Mm,
Because in reality is the funds that are allowed to pitch to you is you will have a selection bias because you won't see everything and you won't have access
mm,
to everything. So you only potentially invest in the funds that actually reach out to you. And they're not necessarily the best. They're just the ones that are willing to talk to you. So I would actually, if I want to invest in VC asset class, I'll probably do a fund of funds. But let's agree, is it more fun to stock pick or is it more fun to buy a mutual fund? let's go for stock picking. I think that's more interesting. So it's always a combination of strategies, but the risk of manager selection is sometimes too big, that you have to trust the manager to do 20 to 30 bets, and you need them to be excited about it for 30 years, or not 30, 10 years. That's one thing, and then you can try and build your own portfolio by diversifying into deals that you think are interesting. Is another way of doing it. But in reality, it's like, where does your interest lie? Do you want to pick a few companies, be close to the founder, work with the founder even, or get a job? I don't know. Or you just want to be passive and see where your picks and thesis as a person in the market, what you believe is going to happen, you might as well bet on, right?
Do you think if someone invested in a syndicate consistently, they would get better returns from like investing in a fund? And this is just a general. I don't know. My hypothesis is that syndicates may outperform funds sometimes because of those reasons we talked about. But what do you think about that?
To be honest, Sasha, I think yes and no. I think it depends on what fund and what strategy and who the people are,
sure.
right? And again, there's also some of the incentives that are not completely aligned, because syndicates, if they're doing it as a full-time job, as a profession, and their incentive is to make fees and whatever, they will be like, I think right now the North Star of what a really impressive syndicate looks like is like Riverside Ventures in the US. They've done 800 deals. Are all 800 good? They can't be, right? Are 100 of them good? Probably. So I don't think it's about only investing what the syndicate leads come from. You have to do your own picking out of that. I wouldn't expect anybody to invest in everything I come with, not because it's not good, but I wouldn't expect that from anybody. But I think you can, if you are thoughtful and you have some thesis about how the world is going to look like, and you have a selection of different syndicates you can choose from, you could potentially build a portfolio that might outperform.
That's an interesting question. I think you tackled it probably the right way. I think we're trying to get a sense of how well syndicates do versus funds. We're trying to launch the first benchmark for that. That's something we talked about already. But watch this space. Yeah, hopefully we have some interesting data on that.
Yeah.
And then let's wrap up by talking about why emerging investors should, launch syndicates. So some points we talked about already. What are the what's the best thing, best feature that you've experienced from launching a syndicate?
I think so it depends. I think for anybody who wants to work in VC or create their own fund, I think making syndicates or SPVs or whatever is probably the closest way of doing the real thing. The only thing you're not doing is managing the fund itself, but actually just focusing on selection, on sourcing and selecting and winning and supporting the businesses. Basically, what you do as a VC, right? But here you can do it on a deal by deal basis. You can actually start going, right? To give you an example, I talked to somebody who was building a cybersecurity fund. And I was like looking at the profiles, like nobody's done investment experience. I said, how many investments have you done? One. Okay. I would suggest you to start investing in syndicates so you can actually build a track record, right? And the one they had done was an angel investment of 50K. They want to do like lead tickets for 500,000 euros. That's a world of difference. Even though you're a founder, you've negotiated term sheets and got investments, leading a fund is like entirely different. So I would argue that it's the best way to build a track record. Getting a job in VC or building a fund is actually going out and proving you can create these investments yourself by syndicate lead. And it's no small feat. If you are able to gather like a substantial amount of money and invest into a startup, that is actually super impressive. So it is the best way of, in my opinion, the best way of building a track record. And it is, and actually a professor from London Business School told me it's also the most profitable way of investing. Because as a fund manager, you will raise a lot of money. You will do 25 to 20 bets. But every loss, which in venture is 50 to 60%, you will lose money on it, or all of your money. You have to write off all your losses against your winners, right? So your ultimate carry will then be lower.
Mm.
But as a deal by deal syndicate, you get full carry of every vehicle. So if I have, God forbid, but if I had 10 investments, 9 of them went to zero and one went to 100x, I would get my full carry of the 100x. And sorry to say, it doesn't hurt me my performance in the one vehicle because it's all separate compartments.
Mm.
So looking at it as where you can make the most money on carry is by far SPVs.
For sure. And then something also, if you facilitate early exits from that as a syndicate lead, enable some of your early investors to, sell positions, you can realize that carry early. But that's a good point. But also on the fund point, a lot of people don't appreciate that, one, your management fee is probably, 2% compared to um, syndicate, which has much higher, upfront fees. So with a fund, you don't get that upfront fee. Your revenue is much more backdated. And then, you've got all of these costs like fund administrator, lawyers, which are, setting up a fund's like 50 to 100K, depending on, how complex it is. There's all
Yeah.
these other ecosystem of service providers which have to support this fund. But whereas a syndicate, if you use something like us, very light touch, very easy to get off the ground, and a lot of it is really just the time you're putting into it rather than spending on other service providers.
Yeah, as of course you're still having to manage your investors in each SPV, which can be
Mm,
5 to 20 to 30 people, whatever. There's work in that. But compliance wise and admin wise and whatever, there's so far for me literally nothing. Right.
for sure.
And as long as you're compliant to the rules and regulations, which I will recommend everybody to do, like don't do anything that's not legal, that's not worth it. But at least from the Danish SEC rules and whatever, it's all about mostly about marketing, right? And as long
Mm,
as I don't market myself as a hey, join my investments or whatever, right? Then I'm completely fine.
yeah, yeah, spot on. Okay, cool. So I think we've been speaking for a while now. What are the highlights from your perspective? So you've launched this, you built a great network, you've gained optionality to launch a fund one day, and it's a lot easier than a lot of people think to launch this. What other final comments do you have to make to anyone
So
aspiring to launch a syndicate?
I can tell you, I've at least for me personally, I've had so much fun in having the freedom to invest in what I like to do and being able to have a, let's say, a vehicle to invest through and help and support founders. I think for me the highlight is when you actually finally put a big SPV together, you invest that into the company. It's really really cool. And when you make an investment at a size a fund would make, that's super cool.
All right, great, good stuff. Well, thanks so much, Oliver. We've got a few more episodes in the coming weeks. We'll do a deep dive into like branding, how to commercialize, how to fundraise, the syndicate. So digging deeper into more of the operational aspects of the syndicate. But I think this was a good intro session. Thanks so much, Oliver. Hope you
You're
guys
welcome.
all enjoyed it. And
Happy
we'll
to be
see you
back.
again. Yeah, yeah. We'll see you again on the next one. Thank you all.
Thank you so much. See you.